We're here today with Geoff Bostick with Guaranteed Rate, and we wanted to talk a little bit about something you might be hearing about, which is a change to the fixed rate mortgage rates. Can you dive into that a little bit?
Yeah, absolutely. And this is something we're seeing a lot of headlines about, a lot of people are talking, and it's a lot of negative attention on it. And I don't like to focus on the fear base of this. I want to focus on how this might have affected a sample size of things. But what it is it's a change to loan level price adjustments. Those are called LLPAs. And basically those are risk-based charges based on what a credit score is versus how much money you're going to put down. And traditionally, the more money you put down and the higher your credit score is, the lower rate, the lower in fees associated with that rate that you might have. And then the lower your credit score and then the less money you're put down, it's going to change some things. The emphasis is to enable or to open up home ownership opportunities and to be more affordable for those that are less served. That's the whole goal of this. Now, there might be some perceived negative impacts for those with higher credit scores that might have more money down, that are more well qualified, that some might say. So it's a little bit of a tug of war between, what people think as far as good credit versus money down and who should have the best rates. All that to say, I wanted to do a dive into how would this affect clients that we have seen lately. And so I did a 1-year look back, and that was a little over 100 closed purchase transactions, because that's really who this is mostly affecting right now on the front side. And we noticed of that, over 54 would have had no impact or even positive improvement to where they would have seen better pricing. If we look at minimal to no impact, and I looked at that as a quarter adjustment, that's a quarter in fee, where their interest rate would have been affected by less than 1/8%. And that opened up to 80 out of 102. So we're looking at the large sample size. While there's a lot of negative attention on this, it really wouldn't have impacted, or it would have positively impacted more people than what we would have seen negatively. And so there's always going to be somebody that doesn't win whenever changes are made. We're seeing a little bit of that here.
Got it. Well, thank you so much for clarifying. And if you need any questions answered about financing, please reach out to Geoff.